Welcome to NFT Nation, the most relatable and reliable NFT crypto podcast in the nation. I'm your host, Alex Ferguson, here with my co-host, Michael Wheeler. Today, Michael will be explaining what Decentralized Exchange, aka DEX is. But before we start, let's go over crypto market from the past week. So Bitcoin's looking about down 12%, Ethereum also down 8%. Everything was pretty much down. Cardano down almost 12%, and XRP is down 19%. So, what is Decentralized Exchange, Michael?
So pretty much a decentralized exchange, just to give like a basic definition of it, it's a cryptocurrency exchange which allows for direct peer-to-peer cryptocurrency transactions to take place online securely and without the need for an intermediary. So pretty much it is a straight peer-to-peer, me-to-you, crypto user to crypto user just exchange that you can exchange crypto for crypto. You can exchange like Ethereum for other cryptos on the Ethereum that use the Ethereum blockchain, and people enjoy the decentralized exchanges because they are decentralized and you don't need any middleman, because people enjoy not having to pretty much just pay a middleman to make transactions happen.
So
and
sorry,
go ahead.
So like the middleman, you're saying it's kind of like gas fees, or do we still have gas fees with the
Well, obviously there's gas fees on any type of any type of exchange, because you're moving money from one place to another, but there is less fees since it's just peer-to-peer. There's less, so you're saving money there. But for example of what decentralized exchanges are, probably some of our listeners actually use these. There is PancakeSwap, SushiSwap, and Uniswap. Those are probably the most popular decentralized exchanges currently in the market. And to give context to what a decentralized exchange is, we have to understand what a centralized exchange is. So a centralized exchange, or centralized exchanges, are a type of cryptocurrency exchange that is operated by a company that owns it in a centralized manner. So unlike decentralized exchanges where it's run by like technology and no one turns it off, no one turns it on, for centralized exchanges, one company owns it and one company looks over all the transactions. For example, popular centralized exchanges are places like Kraken, Coinbase, Binance, and KuCoin. And since these companies are centralized, they can control pretty much the entire marketplace. Like Coinbase holds your crypto for you, and when you want to make trades, they do it for you, if that makes sense. Like they are the middleman from selling and buying.
So is centralized a lot more like safe when you're trading?
So I would say, in my opinion, centralized is a lot more safe, since it's tied to like a company. Like you can reach out to like a support staff and actually talk to someone, where a decentralized exchange is pretty much, if you mess up, that's on you. There's nothing to help because it's just technology. Like if the technology can't mess up, it only can be human error. Like if you put in the wrong address, if you get scammed, that's all your fault. We can't do anything about it. But in my opinion, centralized exchanges are 100% more safe. But with the less risk that centralized exchanges offer, it normally takes away from profit in other pros. And also, like, what goes into a decentralized exchange, and the part of the exchange that a DEX is on, which is a decentralized exchange. I'm going to be saying DEX for the rest of the podcast because it's easier to say, and that's the like lingo in the crypto community. But a server is the operator for a DEX. There is no middleman. There is no guy at Coinbase that's going to be like, okay, I'll approve this transaction. It's done every transaction on a DEX is done with smart contracts, which we could do pretty much an entire episode on what smart contracts are. But pretty much it's just a line of code that just completes transactions. Like, say I want to send crypto, or I want to trade crypto with Alex. The smart contract will complete me wanting to send it to Alex and Alex paying me, if that makes sense. Like
Oh, okay.
and the smart contract is always going to be like it's always going to be right, if that makes sense. Like if I try to scam someone, the smart contract will block it out because if they don't pay me, they can't receive funds, if that makes sense. Like it's impossible for you to get funds without paying someone, or you to get crypto without paying someone, if that makes sense.
Yeah.
So, and for a centralized exchange, the company owns your crypto for you. So like Coinbase owns your crypto, even though you have a wallet, you personally don't own that crypto since it's on the Coinbase app. All the Coinbase holdings are in one place, which used to be more risky for hacking since the market was new, but nowadays, since these companies are like billions and billions of dollars, they are less risk to being hacked because they have so many preventions to not get hacked. And there used to be huge amounts of money stolen from centralized exchanges, but obviously there's been security measures put in place. And also, for a centralized exchange, you have to give them your ID and personal information, which they report your profits and earnings to the IRS, which people do not like since you have to pay taxes if you make a huge profit on gains, which is another reason why people use Dexes instead of centralized exchanges. And also, for just like another example of what a DEX is and how they work, it is obviously peer-to-peer instant exchange with no middleman. It's all about choice and giving people freedom. Like, since on a decentralized exchange, you'll find a lot more smaller cryptos, you have the ability to risk your money by buying really, really, really small cryptos that can go up 100 or 1,000% in one day. So you're able to make a lot more money on DEXs than you would on a centralized exchange, since there's a lot more options to you.
So is there like a limit on how much you can like trade with a decentralized exchange?
So obviously it kind of it goes from coin to coin how much you can exactly trade. But how the trading aspect of a decentralized exchange works is it's called a stake pool, which we need to do a podcast again about a liquidity pool. I'm messing up. We could do an entire episode about what a liquidity pool is. So pretty much when you trade cryptos on a DEX, the liquidity pool it's pretty similar to how any other market works, where the more you want to buy something, the higher price the liquidity pool will charge you, and the more you sell it, the lower the price, or the lower the pool will end up paying you. So it kind of regulates itself. And this is why so many coins are able just to like fall 100% in one day. It's because so many people take money out that the pool just keeps getting lower, 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 and lower until there's nothing left. And liquidity pools work really well for DEXs because you're able to get your money out very quickly. This is why a lot of people like DEXs, because they pretty much have instant liquidity. And maybe it's not instant liquidity to like cash or like money or like fiat money, but it's instant liquidity to other cryptos, which a lot of people like because you can change your maybe small, I don't know, Shiba Inu coin that you made $100 on. You can instantly turn it into Ethereum, and then you can go from there.
So have you tried both of these types of exchanges?
So I've experimented with DEXs, but since I'm not as into crypto, like into really, really, really small cryptos as a lot of crypto maniacs, I can call them, I'll say that word for people really heavily into crypto. But especially for someone like me who's into crypto and into other parts of like finance and investment, I don't exactly have time or the drive to do so much research on these really small coins. Centralized exchanges are perfect for someone like me, like the average person. But the DEXs, I can tell, like, the technology of them is crazy because it's just going to be an increase of liquidity, increase of trading, increase of really small coins blowing up and then getting listed on centralized exchanges, and I think both have a really important place in the system. But for me, like the average person, I think centralized exchanges are perfect for me.
So, looking at it from a new person's kind of viewpoint, which one do you think they should they go towards decentralized, like you were saying, or which kind of?
I would say, especially for like a beginner, I would say 100% to get into a centralized exchange, because especially for companies like Coinbase that are huge, they make it very simple for new people to own and trade crypto, which is really good for new people because they may not even know what a wallet is, but they've been hearing Bitcoin on the news the past 2 months, and they're like, oh, I want to put, let's say, $1,000 in the Bitcoin. They're not going to go on a decentralized exchange. They may not even know what a blockchain is. And this is why it's so important there's a place for centralized exchanges for newbies, this is why I think Dexes may be better than centralized exchanges, but centralized exchanges have such an important part in like the economy of crypto, because the more newbies that get into the market and learn about it and invest more, the higher prices are going to go. So I would say 100%, if you're new, definitely create a Coinbase account, create any type of centralized exchange account. They make it very simple.
Okay.
Yeah. So I'll go over some pros and cons of Dexes. Maybe you can form some more questions in your mind. But the main pros of a decentralized exchange is that you don't need to provide personal info. So a lot of people in the crypto community enjoy being anonymous. So that's why people like decentralized exchanges, because you don't have to do your info. So also, DEXs are much faster than centralized exchanges, because especially with these liquidity pools, you're instantly getting your money. You're instantly getting your crypto back when you trade, so you don't have to wait for a middleman to pretty much complete your transaction. And also, it's cheaper. DEXs are cheaper than centralized exchanges, since there isn't a middleman. You don't have to pay a fee to anyone. It's just a technology smart contract that's instantly doing your transaction. And also, DEX is a trustless program, since obviously it's done by a smart contract. You don't have to trust a middleman to do your trading, because you can instantly, the smart contract does it for you. You don't have to trust anyone. You don't have to put your faith in the middleman. It's just instantly done. And also, the cons of a decentralized exchange. So probably the number one con is it's crypto to crypto only. And this can be a pro for some people and a con for the majority of people. But when it's crypto to crypto only, you're not able to like transfer your earnings to fiat. Like, it's going to take you a little bit to be able to turn your, say, the Ethereum you made into fiat, because you're going to have to transfer it, and there's going to be fees and everything. But crypto to crypto, that's a con. Second one is there isn't any support or like help, since it's decentralized. Like, there isn't going to be a company there isn't going to be like a help desk for a centralized exchange, there isn't going to be a help desk for like a decentralized exchange, because it isn't run by a company. It's just run by technology. Also, you have to use a hot wallet for decentralized exchanges. So pretty much a hot wallet is just like your current Ethereum or Bitcoin wallet that you're trading on, that you're taking money in and taking money out, like you're constantly trading. You have to use your hot wallet. So hot wallets can easily be hacked if they get your private keys. And a lot of crypto investors use cold wallets instead, because they're more safe. And also, when it comes to these really, really, really tiny coins, there's a lot of low liquidity. Like, there's a reason we see coins go up 100,000% in like a month or whatever, or like maybe even a day if it's crazy. But like, since there's such low liquidity, if the biggest holders of the coin all try to get out at the same time, it's going to drop by almost 100%, because there isn't enough liquidity to kind of spread out that payment, if that makes sense.
So is there a max on transactions in either one of the exchanges?
So obviously, like the max transactions would be whatever, like how much crypto is in the space. Like the max transactions for Bitcoin would be, I don't know, however many Bitcoin are currently in the system. But for something like, I'll use like a small coin as an example. I'll just use Sheep. I mean, it's grown a lot in the past couple months. But for a small coin like Shiba Inu, if the main holders say they own 30% of the project, 40% of the project, if they all decided just to sell at one moment, that price would drop insanely. People would lose millions to thousands of dollars. And that's why there isn't really exactly a max, because in the market you can constantly buy and sell. I mean, people can just keep selling until the price goes to actually zero. But like, it's hard to explain exactly what like a max trade volume is, because there's theoretically no max, if that makes any sense.
Yeah.
It's kind of like saying, is there like a max a stock can be traded? Well, I guess the stock could go to zero, but then people will want to buy it, if that makes sense.
Yeah.
Because it's like for everyone that's selling, there's always someone that's going to buy.
Yeah.
So, do you have any more questions for me? Because anything else you want to learn?
You pretty much answered everything I had.
Yeah, and I think I've covered all my notes. I did a few hours of research on this topic, and this is why, like, Alex and I created this podcast. This is just going to be straight to the viewers. I'm talking straight to the listeners right now. This is like why Alex and I made this podcast, is because we realized that we want to learn about this stuff, and there's so many people out there that don't understand like these basic topics of crypto. And when we do research ourselves and we teach each other, everyone's learning, everyone's getting into the community, and everyone's getting better. So if you all have any more questions for me, Alex, take it away.
Yeah, so thank you guys for listening. Like Michael was going to say, if you have any questions, DM us on our Instagram, or you can email us. And yeah, thanks for watching. Thanks for listening.
We'll see you all later. Have a good one.